Kia ora everyone, welcome back to our next edition of Econ Talks. Gareth, we've had the latest Consumers Price Index announced, staying or plateauing rather at 7.2% on an annual basis. On a quarterly basis, up 1.4%. Now that's better, if you will, than the mega jump we saw back in the September quarter, 2.2, one of the largest on record. But let's be clear, 1.4% isn't good. It's lower than some of those higher levels, but it's nowhere near what the Reserve Bank wants to see. That's almost a year's worth of inflation in just one quarter. Are we seeing any improvements? How much good news was there in this CPI release? And are we starting to see movements in inflation?
Look, it was slightly above market expectations, so you'd say that was bad news. It was below the Reserve Bank's forecast of annual inflation at 7.5%, which they put out late last year. That did seem a little bit on the high side, that number, and I think financial markets have taken it and said, well, because it's below what the Reserve Bank expected, that is good news. I'm not so sure, because remember, we've had lower fuel prices, petrol prices coming through, and there you strip those out, there was still a lot of underlying inflation. You've had a December quarter is normally quite a weak quarter for inflation anyway, so the fact that that quarterly number was below what we'd seen in the previous couple of quarters is probably, to me, neither here nor there either. And the other factor for me is just the sort of breadth of price increases that you're seeing. I think that you'd noted in your release to our clients that it was the highest proportion of the goods within the CPI rising in price since they got data back to 2010. So there's no real signs there that inflation is starting to sort of become less pervasive. If anything, it's spreading wider and wider across the economy. So yeah, although markets have responded positively to those inflation numbers, I don't really see it as being quite as I guess good, relatively speaking, as that response would have suggested.
Absolutely. And I think when we look through the numbers, what we saw, the good news really was that it stopped accelerating even further upwards. That was the end of the good news. The bad news was that it hadn't come down by as much as people, or it hadn't started to slow rather, by as much as people had been wanting to see it. Of course, we picked it right for, I think, about the second time in about 3 goes. So all credit to the model from yourself and the team, Gareth. What was interesting when we looked through the numbers, though, is like you say, not only the breadth, with over, I think it was something like nearly 72% of all items that increased in price in the December 2022 quarter. That was the second largest on record going back to 2010. But importantly, when we look through it, there are just so many different components. Food prices, of course, remain at what is now a 32-year high. Those are continuing and likely to continue to go even further up in terms of growth, given the awful weather we've had recently. Oil prices or fuel prices charged here domestically in New Zealand didn't fall quite as much as everyone was expecting. We saw that the likes of airline flight prices were quite considerably more expensive. But what got me as well is when we look through the figures, you were seeing a shift from some of those goods-based inflationary bounces towards more service-based inflation, which I know we've looked at supply chains a lot in recent years. They've started to recover, but if it's starting to shift to goods, from goods to services, it makes it more difficult to get under control. One thing, of course, that was interesting was that building costs advanced at a slower pace than what we've seen recently, up I think 2.1% might have been in the quarter. I mean, what do you make of that, Gareth? Does that align with what we're seeing in the rest of the broader construction sector?
Yeah, I think some of those materials prices and shortages and supply chain disruptions that had dominated the headlines earlier through 2022, some of those have started to be resolved and ease, and so I don't think there is as much pressure coming through in terms of material costs. We've seen some of the sort of raw commodities such as iron ore prices easing back as well, and so a bit of relief there, but overall still a lot of pressure. Talk to clients throughout the building industry, and labour is still in relatively short supply. There's a bit of relief again coming through as the borders have reopened, and Immigration New Zealand and government policy has responded to allow more workers to come in. But let's be real about it, 2% a quarter it's still 8% plus over the course of a year. And when you're coming on the back of, close to 20% price rises over the previous 12 months, it's a bit of relief, but it's still going up. And in terms of sort of affordability around construction and building, it's not making it any easier to build a new home than it has been previously as well. So Yeah, it's a case of sort of little turning points, but there's not real relief coming through in that data there. And I think that's the sort of theme that we're getting across broader price pressures, is that, okay, they're not going up as fast, but they're still going up faster than we'd like them to be.
Which is quite incredible, right? I mean, you would have thought at this point, after such a large amount of price increases that we've seen over the last 1 to 2 years, that at this point, having those same levels, those same percentage increases on a much higher base price, if you will, is actually quite hard to achieve. It's a lot of extra money that's coming through. And we know from various surveys that both those input cost pressures and the pricing pressures of what businesses are looking to charge out in their own prices are still high. There's a little bit of moderation perhaps on the pricing side. Profits are being squeezed, but I think what we saw through those inflation numbers is that, look, the broadness is still there. Sure, things haven't accelerated further, but don't kid yourselves that they're all of a sudden becoming better on the inflation front, because realistically there is still a lot of pricing pressure that has already built up, and importantly, nothing is about to get cheaper. We'll assess where those prices go into the future and how quickly we might see inflation turn around. Expectations, of course, that it might be able to slow down quicker, but risks now that it stays up at that higher plateauing level for longer. And we'll check out where inflation goes in future quarters on one of our next editions of Econ Talks.